Kingdom Holdings invests $283 million in the UK's Phoenix Group, and ADNOC takes a 50% stake of Total Energies Egypt. You're watching the Daily Brief with Forbes. I'm Ramya Faraj. Kingdom Holding Company is investing $282.99 million in the Phoenix Group, one of the largest insurance, savings and retirement companies in the UK. It's part of an investment program that was announced in June, and the stake was recently increased to 3.79%. Phoenix is the largest savings and pension company and one of the largest insurance companies in the UK. ADNOC's retailing unit is taking a 50% stake in Total Energies' fuel distribution subsidiary in Egypt for $186 million. An additional payment of up to $17.3 million could be made if certain conditions are met. As part of the deal, several service stations of Total Energies Egypt will be rebranded to ADNOC, while some future sites will carry the ADNOC brand. Total Energies Egypt is the Egyptian fuel distribution unit of France's Total Energies, with 240 fuel retail stations and operations in wholesale fuel, aviation fuel, and lubricant. The debate continues whether the U.S. is in a recession after real GDP decreased at an annual rate of 0.9% in Q2, following a drop of 1.6% in Q1. While 2 consecutive quarters of contraction is often used to identify a recession, analysts say the situation is more complicated. Some say the U.S. will be in a recession if it suffers months of declines in new jobs, consumer spending, manufacturing, and personal income, and this isn't the case yet. Wall Street rallied last night for a second day, with all 3 major indices ending up more than 1%. This is despite the data showing the U.S. economy shrank for a second straight quarter, as investors believe it may keep the Federal Reserve from being as aggressive with the interest rate hikes in future. The Dow rose 8% and the S&P gained 1.2%, while the Nasdaq also finished up 1%. Amazon and Apple were a relative bright spot in a week of otherwise lackluster earnings results for the tech sector. Amazon shares climbed more than 12% in after hours as its sales grew more than expected, topping $121 billion in the quarter. But it logged a loss of $2 billion as it continued to work to rein in costs. For Apple, product sales tallied $63.4 billion in the quarter, a drop from the same period a year earlier, but the dip was made up for by services revenue that climbed to $19.6 billion. Standard Chartered saw first-half pre-tax profit rise 19%, in line with market expectations. Statutory pre-tax profit for the lender, which earns most of its revenue in Asia, increased to $2.8 billion in H1 from $2.35 billion in the same period a year earlier. The bank also announced a share buyback of $500 million. The emerging markets-focused lender benefited from rising interest rates. And Instagram will pause features that users say make it too much like TikTok. Kim Kardashian and Kylie Jenner were some of the most vocal users to call for Instagram to stop trying to be like TikTok. It sprang from a change.org petition that received more than 229,000 signatures as of last night. Changes included displaying videos in full screen the way TikTok does and recommending posts from strangers. I'm Ramya Faraj. This is the Daily Brief. Thanks for watching. Bye for now.